So you know how Elon Musk sends very cryptic messages to Tesla shareholders? He literally has a lawyer that has to go over his tweets before he posts them. Well, let me know what you guys think about this. Elon Musk reposted this from Mario Nafal on X that says, Tesla service centers struggling to keep up with surging demand. Reports out of Schaumburg confirm that many Tesla owners are seeing firsthand service centers are slammed. Now, in all fairness, I had no idea what Schaumburg is. I sounded like somewhere in Germany, but in fact, when I give it a good Google search, it's a village in Illinois. Yeah, that was my last guess of where this place was. Nonetheless, I find that interesting because it's America. And we don't get a lot of data out of America. We don't get weekly insurance registration numbers. We don't get monthly data. There's virtually no way of tracking US demand besides something like Google Trends. And, well, Tesla is still skyrocketing on Google Trends in America. We'll get to that in just a moment. But it goes on to say that according to a Tesla employee on the ground, demand is so high they're barely keeping up. Tesla vehicles are flying off the shelves faster than ever, with new buyers flooding in and pushing service teams to the limit. Wait times are climbing, bays are full, and the buzz is real. Tesla's growth isn't slowing down anytime soon. Isn't that just beautiful? This is what we've talked about for a month now on the channel, maybe 2 months. Tesla's demand is going to skyrocket, okay? Partially due to the Model Y, but you can also make an argument that, let's call it 50% of the population, which were more conservatives, really don't lean towards EVs in one way, shape, or form like ever historically. Trump bought an EV. You can see this in Model S search trend activity that continues to be double what it was last year. I imagine that could also have a positive impact to Tesla's demand. And the fact of the matter is, what do you think the population is of people that are vandalizing Teslas or really wouldn't purchase a Tesla because of Elon's political affiliation? It's not very high. It gets, a lot of media attention because it's a good story, right? It gets clicks, okay? But it's not the reality of the situation for Tesla. And Elon Musk reposting this is essentially like Elon confirming this, because Elon, obviously, for legal reasons, cannot come out and make a post like that, but perhaps he can share one. Again, as I've talked about now for a month or two, you're going to see Tesla's deliveries explode over the coming weeks and months. Now, does that ultimately mean Tesla is going right back to new all-time highs? Not necessarily. I think we have bigger issues going on in the economy. I think Wall Street really wants some clarity on, are we going into a recession or not? And if we do, who's going to be the winners? Who's going to be the losers of that? Now, I'll tell you, if we go into a shallow recession, Tesla buyers shouldn't be as impacted because they tend to be households that earn over $120,000 a year anyways. And those are usually not the first jobs that get cut during a recession. Let's just be honest there. I know that sucks to hear, but it's the lower income, consumers. It is leisure, travel, hospitality, hotels, things like that, cleaning services, jobs where maybe you could do without. But if we do avoid a recession, if things get better from here, it's all going to be about Tesla deliveries. It's going to be about robotaxi. It's going to be about the newer, cheaper Tesla that is supposed to be coming out here pretty soon. And by the way, we should be getting new information on that literally any time now. Probably new information on Tesla's earnings call, which is going to be coming up here in the next couple of weeks or so. And we may get an event for this. We're not exactly sure, but I think a lot of people have forgotten about the good things going on at Tesla. And that's kind of the difficult part when you're in an economy that is, I would say, 50-50 chance of a recession, but you also have Tesla that is so beaten down, so, beat up, literally, like, man, just look at media, right? If you look at media headlines, Tesla is going bankrupt. There's literally a group on Reddit that is shorting Tesla. Like, that's probably a pretty good contrarian indicator that sentiment is way too negative. But then again, you have a weakening economy. And it's pretty hard to figure out what's coming next for Tesla in the short term. But I'll tell you, in the medium term, 12 months from now, I think the stock's going to be dramatically higher than where it is today, regardless of really what happens in the economy. I still think it's true in the second half of this year, Tesla's story is going to be a lot more about Optimus and Robotaxi and, again, even the cheaper, lower priced Tesla than it is about anything else. And you can see here, Tesla in search interest remains at an all-time high. So this is interest over the past 12 months in the United States. It was not just a one-time, move up. It looks like a sustainable move up. It looks like there's a lot of people talking about Tesla. I also think this is pretty interesting. Tailosive EV on X says that media hypes up Tesla vandalism way bigger than it really is. I drove my Tesla for weeks in LA, saw Cybertruck, 3s, Ys everywhere. I work in the Bay Area and drive around there routinely. Never once saw a vandalized car, nor has my car been messed with in any way. And I know it does happen to some people, but it's like every story is being publicized. Okay, it's like any crime, right? No matter what it is. Okay, anything really, for that matter. But crime's a good example here. If there's a crime, right? Somebody gets killed or gets hit by a car, right? And yeah, every time something like that happens, if the whole United States knows about it, people are gonna come to the assumption that the U.S. is a lot more dangerous than it actually is. Whereas in reality, maybe it's only select instances happening here and there. And I know, the world's crazy these days. But that's kind of what's going on with Tesla. The singular incidents are so, blown out there to everyone that there's this false conception that if you purchase a Tesla, you're going to be vandalized and hated on. And the reality is not that. And usually with short-term sentiment reactions, it tends to be a neutral, if not positive, over the longer term for a brand. Because why? You're getting a lot of attention. Even if it's not the greatest attention, you're getting a lot of free, essentially, advertising. You can also see here that Tesla owners in China are making some pretty awesome FSD videos, and they're posting them on Douyin, okay? Douyin is the TikTok of China. It is TikTok in China. They call it Douyin. This should be huge for actually boosting Tesla's sales in China. As people come to realize the technology that Tesla has, you're going to continue to see Tesla dominate in China. And, for FSD that was trained off of like internet clips from China, it is insanely good. Like, look at it going through this congestion. I mean, that's ridiculous. I think a lot of human drivers couldn't do this without hitting someone. And FSD makes it look a little too easy. Also in the news today, Sawyer Merritt shares this video from Dr. Jack that says, lately I always check my Sentry mode on my Cybertruck when I return to my vehicle, but this is all I see. Many more people love Teslas than have a psychiatric condition against a material thing. And you're actually seeing a lot of this where especially the Cybertruck. You know, people are very intrigued by it still. I know some people have, you know, still never seen a Cybertruck, especially if you don't live in a major city. And when people do, it's still catching a lot of attention. This is the halo effect, potentially, that we've talked about before here on this channel. It's been a couple of months, but I think that halo effect could still be brewing. And again, you can see this here, just a bunch of people coming up to the Cybertruck and are blown away by it, not vandalizing it, right? People want to check it out. They don't want to light it on fire 99.99% of the time. Just that 0.01% that does is very just publicized and blasted everywhere. And I think that ultimately turns out to be a buying opportunity. Also in the news today, Tesla has increased inventory discounts slightly in the US for new legacy Model Ys to as much as $8,820 off, including a $500 referral code discount, but inventory is selling out, with some areas showing no legacy Model Ys available. Demo legacy Model Ys are as much as $9,200 off. Q1 ends in just 9 days, which, I mean, if Tesla is able to sell these old Model Ys from inventory, still, like, this vehicle is almost $40,000, even though it was reduced by $8,000. If they're still able to pull in those kind of dollars from the older version of the Model Y, I can only imagine what the new Model Y looks like. And here you can see that group that I was talking about. A group on Reddit called Elon Musk Hate is reportedly trying to short Tesla. They are buying the $100 puts for June 20th, 2025. What a great way to lose all of your money. Seriously. The stock is $245 today. Good luck with that. And the way that options work, you only have 3 months on these contracts. I don't think these people have a clue what they are doing, because you need the stock to move down a lot quickly, like soon, or these options are going to start decaying rapidly because they're like 65% out the money. Like, that's crazy. If you really wanted to short Tesla, you'd buy like the 250 put and actually short Tesla. This is just a great way to lose all of your money, and it's actually hilarious to watch. I never, ever root for retail investors to lose money, ever. I've never once in my life. But like, if you're this incompetent with your money, you probably shouldn't have it anyways. Sorry. As you can see from Google Trends data, if we look at worldwide, things look really good. I mean, the Model Y is at 21. In this same week last year, it was at 19. Like, for all of the people that share all of this hate and negativity and talk about the Tesla brand getting worse, you're just not seeing that reflected in real-time search activity. The Model 3 is at 17. This same time last year, it was at 18. The Model S is at 9. Last year it was at 6. The Model X was at 6 last year, and today it's at 5. Cybertruck's at 23. Last year it was at 19 during this same, time period. That is looking pretty good to me, if I say so. And I think the fact of the matter is Tesla's stock down over 50% from all-time highs. At one point it was down like 55%. Priced in a bad Q1. Like, Tesla stock shouldn't, not a guarantee, but it shouldn't sell off April 2nd when we get a bad delivery number, because we should already be priced for that. Now, there's the possibility that it's really bad and Tesla stock sells off. Of course, there's that possibility, but it shouldn't happen. Now, if Q2 starts to look bad, or indications are that the rest of this year could be bad, that's when you get potentially more damage to the stock. But I think you've already priced in, well beyond priced in, the effects of a negative Q1. And we already expected this. Like, for a long time now. As soon as we knew the new Model Y was coming out, we knew it was going to take some time to transition to mass production of the new Model Y, switching from mass production of the old Model Y. It does not happen overnight, and there is a lag. And that quarter, when you introduce a new vehicle, numbers are not as great. So this is not a huge shocker to any of you. Now, option activity on Friday for Tesla, you had 186 different trades totaling $226.68 million with a positive order value of 45%. Over the past week, you had 2,164 different trades totaling $9.54 billion with a positive order value of 48%. So basically neutral for Tesla's option activity from hedge funds and institutions. And if we look at Tesla's short interest, generally speaking, it has been falling for months. It's basically at the lowest level it's been at ever. Like, it's almost never been lower than where it is before. It was lower like 3 weeks ago. It did hit 2.13%. You had 59 million shares sold short. Today, you have 67 million shares sold short, but you're pretty much at the lowest you've ever been before. This compares to like 2024 when you had over 100 million shares sold short. Even previous to that, you were like 120 million shares. So you are dramatically lower today than you were before. And that's a good sign from hedge funds and institutions that some of them actually see through the BS and do not want to be short on Tesla at current levels. If the stock was going to fall dramatically lower based on Tesla's fundamentals, yes, anything can happen with the economy, recession, blah, blah, blah. That could put downside pressure on Tesla inevitably. We'll have to see. There's no guarantees of that. I think it's a coin toss. I think it's 50-50. But if hedge funds and institutions like seen some big disaster coming for Tesla that was going to be long lasting, they would be shorting Tesla here. Instead, they're covering on short positions. Trust me, Wall Street's greedy. We're all greedy. We're greedy capitalists. They would take advantage of that if they knew that was coming. And they have more information than we do. And what I also find pretty interesting is something we talked about in the last video, actually. Google ads. Tesla went from running about 5,000 at the peak. I think they ran 6,000 for a couple of days. Now they're down to 2,000. And virtually like 95% of these ads are for power products, for power walls and megapacks and solar, not for Teslas, which is interesting because if you were having a problem selling Teslas, as maybe the media is suggesting, you would probably see Tesla advertising more about their vehicles, not their energy products. So the fact that you're now down to 2,000 ads and a vast majority of them are just energy, not about cars, is probably a good sign versus not that Tesla demand looks pretty good. You can also see Tesla's inventory numbers continue to be on the decline, especially the Model Y. Look at that. 1,800 vehicles in global inventory. You have not been this low in over a year. Like I don't even know when the last time was that you were this low in Model Y inventories. It has been a very, very long time. Okay. Why is that a good sign? Well, one, you're selling down the old Model Y, but two, the new Model Ys you're producing, they're all being sold. So they're not sitting on, showroom lots, right? They're getting sold. So that's a great sign. Now the Model 3, sitting at about 2,800 vehicles in total global inventory, Cybertruck at 3,000, Model X at 2,100, and the Model S at 1,200, all of which suggest very strong demand for Tesla, which I know it's going to sound crazy unless you watch these videos and actually see the data that shows Teslas are still selling very well. And we'll talk about this a little bit more in depth in the next video. What could come out of Tesla this week? I think the bottom line is, guys, we have two things that are going to move Tesla: company-specific news and the economy. Okay, clearly company-specific news these days doesn't really get reflective in the stock. Okay, bad news, yes, People react to bad news. The stock falls on bad news. We've gotten a lot of good news recently that the stock has not reacted to. FSD launching in China, what did that do? Nothing. FSD launching in Mexico, what did that do? Nothing. FSD is soon to be launching in Europe. We've got confirmed reports of that. What did that do? Nothing. Tesla just opened their, or announced their third Megapack factory in Texas that should be up and operational this year. That should add $8 to $10 billion of revenue, like over the next 12 months. Did that do anything? No. Like, there's almost nothing in terms of good news that really is moving the stock here. I think Wall Street wants a little bit of clarity on the new lower price Tesla. Okay, we haven't heard much about that, and I think that's kind of the big news that could be coming soon for Tesla. But that's, again, only my opinion. Obviously, Robotaxi is huge, Optimus is huge, and I think those things will be bigger effects on the stock in the second half of this year. On the other side, it is the economic data. I'll go over the economic data coming out this week. We have some very important hard data. As the Fed said last week, the soft data looks like shit. The hard data looks good. Question is, does the soft data work its way into the hard data? If it does, you're going to get more fears of a recession. Likely stocks come under more pressure. So I think it's pretty simple this week. Bad data is bad for markets. Good data is good for markets. And hopefully with our PCE report coming out this week, if that comes in low, that's going to be a big positive. But again, we kind of have the inputs already from PPI, so we'll see. With all of that said, if we have a good week this week, 250 is a big level to get above. We've had a lot of resistance there. If we can get above that level, then you want to target that 20-day moving average at about 261. If you get above that, then you're looking at your 200-day moving average at $284. You get above that, then you're looking at the 300s. Then you're looking at 310 as your first level of resistance, and then 325. Then your 50-day moving average at 335, and then your 100-day moving average at 347. Okay? I wouldn't count out a big upside move here, but it's just uncertain because of these recession fears. Okay. Now, also, trade headlines will be important. And yeah, we'll go over that as well in the next video. So, ladies and gentlemen, let me know what you think down below in the comment section. If you're concerned about the downside, first downside level to watch is about 210. Found a lot of support there around October. You should find a lot of support there again. 215 or so just recently found a lot of support. Below that, it's 200 and then 180. So those are the levels to be watching for. Have a fantastic rest of your day, and I will see you in the next one.